Hope is what gives us energy. So we need to be setting goals. Most people don't even do that. And then we have to have hope that we can achieve those goals. And that hope is the energy that drives us to achieve those things. Lenin had reportedly said to John Maynard Keynes, which is that the best way to destroy capitalism is by debauching the currency. So he said that if we can destroy the currency through inflation, all relation to value and money will be lost until eventually the best way to get rich will be through gambling and theft. Tariffs could provide enough protection and incentive to bring a lot of innovation to the world, AI and automations and things that are really important. And I think it's going to lead to the greatest era of prosperity and wealth that the world's ever seen. Money is a byproduct of skills that I develop and relationships that I build. New skills times the relationship equaled the money. When I look at the explosion and wealth of information that we have at our fingertips and the combination of a global monetary asset that can't be debased, I see the greatest era of prosperity that we've ever seen, greater than the Renaissance. So I'm super bullish on that as well.
Hello and welcome from Bitcoin Vegas 2025. I'm Afloat with You're the Voice.
And I'm Ben from Crypto Talks.
And we're here today at a collaboration. We're going to interview a series of guests here in Vegas, and we'll introduce each one of them for you, and then we'll roll with the episodes.
The episodes are going to be released on both You're the Voice and Crypto Talks, so make sure you're subscribed to both.
Our next guest is Mark Moss. Mark is a serial tech entrepreneur, VC investor, and one of the top Bitcoin tech and macroeconomics educators, founder of Market Disruptors, and partner with a Bitcoin Opportunity Fund. Enjoy this episode. Mark was, by the way, one of my first guests, so go back and watch my first episode with him from about 2 years ago. All right, Mark, thanks so much for agreeing to come and have a chat with us. You have a very busy schedule here in Vegas, so thank you.
My pleasure. Always love to catch up with you.
And it's the second time we're doing this.
Yeah.
Second time you're on my podcast.
Yeah.
Thank you. Ben Samoja, my friend.
Ben, yeah.
With Talking Crypto. So we're doing this on both podcasts.
Great.
Let's dive straight into the questions, all right?
Let's do it.
All right, so we're in Vegas, Sin City, where people gamble and play to earn more fiat. Quite a place to run a Bitcoin conference, right?
Yeah.
But what does this contrast make you think about today's monetary system and people's participation in it?
There's a lot there. First thing I'd say is, as I was just walking through the casino right now, I was looking at all those people playing slots, and I'm just like, I sure hope they bought some Bitcoin.
I know.
But from a deeper level, and I told my wife, I'm like, I don't know what appeal that they have to sit there and do this all day. She's like, well, they probably don't want to jump out of helicopters and snowboard and ride dirt bikes either. I'm like, okay, anyway. But I think on a bigger level, what it really is it always reminds me of what Lenin had reportedly said to John Maynard Keynes, which is that the best way to destroy capitalism is by debauching the currency. So he said that if we can destroy the currency through inflation, a series of inflation, all relation to value and money will be lost. And then he said at the end, he said, until eventually the best way to get rich will be through gambling and theft. And so when you look at where we're at today, we're here in a city that's been built by gambling. You might say that most of politics is theft, right? I mean, the mob, right? So yes, right? So I think there's always been gambling and theft. I mean, that's just part of human nature, I think. But I think back to like what you asked, what does this really say about the nature of society right now? And that's what I think. And it's not just obviously in Vegas for sure, but it's gamble culture. So it's meme coins, meme trading, right? It's the get rich quick, right? It's the I can get rich with AI. I don't have to build a real business. It's all of that. And unfortunately, that's as Lenin said, right? It's a result of debauching, of destroying a currency in a capitalist system.
Yeah, absolutely. I think it also just shows that money today, because of that, has become in a way a tool to make more money instead of creating and transferring value and then therefore using it as money.
And that's a big piece. And that's one that sort of makes me a little sad for the civilization, and I think obviously it's a major detriment to the civilization. And if you look at other countries, so around the world, we have multiple currencies, dozens of currencies in double-digit or higher inflation, right? That's happening. I'm guessing 4 or 5 currencies probably won't make it out of 2025 at the rate that we're on. And in those environments, when you guys have traveled to these countries, they're all gambling. They're all gambling because inflation is happening so fast. It's like their only chance of getting ahead. But to the point that you just made, which is a really good one, is that all of the trading, all of the gambling, so all these people now are trading stocks, or all these people are trading crypto or trading meme coins or whatever. To your point, there's no value that's actually being created there, right? There's no problems that are being solved.
Yeah.
They're just moving things up, and they're extracting wealth by moving things, but without adding anything. And unfortunately, it is pretty harmful.
It is. It's also very connected to the changing monetary order, right? So while we are seeing all around the world all this tariff war and currency collapses, and Scott Bessent calling to reform Bretton Woods again, and IMF, etc. Where do you think we're heading on that front? Like where are we in the new monetary order and the changes around it?
I think we're certainly in that, and it might be like another Lenin quote where he said, decades nothing happens, and then days where decades seem to happen. And so we're certainly in that part where the decades are happening in sort of days. And in regards to the monetary order, we're seeing that it happens on about an 80-year time frame. And so about 80 years ago was Bretton Woods, to the point you brought up, in 1944. And we have sort of this new monetary system being ushered in a number of ways. I don't know if what the Trump administration and the Scott Bessent are trying to do is as big as the Bretton Woods Agreement. It might be a little bit more in line with sort of what the Plaza Accords was in 1985, which is sort of getting the countries to sort of repeg back to the dollar and allowing the dollar to devalue. But I would say we're probably more in like when the dollar took over from the pound sterling in like the 30s and 40s, that was about a 30-year process. So I look at what we're going through as more of a process and not an event. So a lot of people here, a lot of my friends, a lot of people you're probably interviewing, they want to tell you that the dollar's demise is imminent and that the system is going to collapse any day. And it's really the gold bug message. The only way to really sell gold is to preach doom and gloom.
The Robert Kiyosaki message.
Yeah, Peter Schiff and Harry Dent and my friends here. I don't want to throw anybody under the bus. But they try to sell you this doom message of that the system is unsustainable. It's all going to come collapsing down. If you don't get in the life raft, you're going to get, swept by the tide, etc. And that is all true. I'm not dispelling that. But it's not an imminent event. It's a process that we're going through. And so just like when the dollar took over from the pound sterling, again, a 30 to 40 year process, we're in a 30 to 40 year process. And so the process that we're going through is that in a debt-based monetary system, which we're in since 1971, it's been pure fiat, it's always forced to expand through debt creation. That's just the mechanics of the system. I'll be doing a panel here with James Lavish, my partner at the Bitcoin Opportunity Fund, and Lynn Alden, and we're going to be talking about the Triffin's dilemma. And part of that, which is that because of that, the dollar having this reserve status of the world, we're always forced to send dollars out to the world and then at the expense of our own industrial base. It's not exactly true, but in this fiat system, we're going to talk about in the panel, but in this fiat system, we have to continue to always expand the money supply. Now, some people in government, like Scott Bessent and Trump, came in full of fire and vinegar. They're going to change the system. They're going to put the U.S. on a budget. Elon Musk came in with the Doge Act, and they're going to get the fraud and waste out. Elon Musk is done. He's tapped out. He realized that's not going to happen. And even Scott Bessent said, it was about 2 weeks ago, he said, the only hope we have is to grow our way out of this. So even them who came in maybe a little naive to government, thinking more like business people, thought we can do this thing, we can fix it. And to be honest, when I listened to their interviews in the early days, I thought they could. But you see, they're throwing in the towel like everybody else, and that's because, as Lynn Alden would say, nothing stops this train. The money supply has to inflate, and because of that, it just continues to devalue. So back to this monetary system. So being a process, not event, it has to continue to devalue. So we've been seeing it, and it's going to continue. I just think it can last a lot longer than most people think.
You think decades?
Yeah, I think decades. Wow. Yeah, and so yes, we need to be jumping off of the ship. And for those of us that jump off earlier, we have an
The better.
advantage.
Yeah.
For those that jump off later, it's worse and worse and worse. And for those who don't even know what's going on, it's terrible. But again, it's not like you have 90 days or 2 years to prepare. Like it's not coming like that.
You're the Voice is brought to you by Trezor, the original Bitcoin hardware wallet company pioneering the development of self-custody for crypto assets since 2013, empowering individuals with an open source device, enabling beginners and experts to easily and securely hold their coins. I find my Trezor super easy to use and recommend it to my friends and family. Enjoy my 5% discount on Trezor products by clicking the link in the show notes and using the code AFLAT.
I want to challenge you on the time frame for a bit, because I think that's what's different now is that in the 30s and 40s of the last century, we did have some kind of gold pegging, both in the UK and the US, while now we are purely on more than a 50 years, like you said, a debt-based system. And the debt has become so large, both with households, corporates, and now governments are expanding their balance sheets substantially. We have come to a point where almost all the world is like Argentina, where they have no other choice but to print, like to move to the actual delivering money, helicopter money to the pockets of the people, as opposed to trying to go around with QE and all that, because the dispersion has become so large, and wars and all this government spending just needs to increase. So that makes me more wary that it's not going to be a decades kind of thing, but more of maybe not a year or two, but probably sooner. What's your take on that?
Yeah, well, you're right. And so all the bond markets, the long bonds, the 30-year bonds around the world are all making new all-time highs. And when the economy's kind of struggling, right? We just had a negative GDP print. So typically you would see that happen when the economy's booming. But now all the bonds are making all-time highs. So basically what that's saying is that the world is seeing that this monetary system, there's no end in sight to the printing. That's what they're seeing. And they understand they're going to get paid back with devalued dollars. So you're right from that perspective. As far as will it lead to wars? Oh, before I get to that. So yes, you're right. The world sees this. And yes, the governments have to keep printing money because the monetary system has to continue to expand. A lot of these currencies won't make it, and they'll switch over to the dollar standard, and that's going to keep expanding as well. Now, will it lead to wars? Haven't we had wars since we were on the gold standard? Haven't we had wars since the beginning of time? Is it really going to lead to more wars? It's leading to certainly economic wars and trade wars and things like that, but I don't think it has to lead to a hot war. And again, hot wars happen. Hot wars happen more over ideology. I mean, you guys are from Israel. Hot wars happen over ideology, not money. Certainly money, yes, but like it's typically ideology more than anything. And so when you have clashing cultures and clashing ideologies, you have that, I think, more than money on that standpoint. Now, how long can it keep going for? Well, it can keep going for a long time. I think that most people would rather, if you gave people the choice, would you rather lose half of your retirement savings, half of your home's value, half of everything, and have gas 10 or 20% cheaper? Or would you rather see all your investments and your assets go up and have gas 10% more expensive? I think the answer is pretty obvious. And so it's also what the government needs to grow out of this, right? So the government can't grow out of it through deflation. So what I would say, you referenced the 30s and the 40s, we're not in the 30s and 40s anymore. We're nowhere like the 30s and 40s. And I think anybody who's pulling charts and graphs from the 1800s or the 1930s doesn't realize that we're in the age of AI and iPhones. And so they need to update those models. Today, a recession, if that's what we're talking about, like how long can they keep this going? Will the markets crash? I think is what you're asking. It's a policy decision. We have 120% debt to GDP, right? We're running $2 trillion deficits in the United States, but all the governments are running these deficits. So basically it's a policy decision if they don't want to continue to print that anymore. And what government's going to choose that?
None.
So the question is then, how long can they keep it going before they're forced to relent, I think is probably what you're getting at. And it's the law of diminishing returns, because what happens is you're spending 50 cents to get $1 worth of growth, and eventually $1 to get $1 growth, and eventually 50 cents to get a dollar debt to get 50 cents of growth. And that's the law of diminishing returns. And I just think it can go on a lot longer than most people think. And I think we can look at, you mentioned Venezuela, or I think you mentioned Argentina. How long has Argentina gone on for? and it just continues to muddle along. Like,
Mhm.
when did Argentina collapse? Because last I checked, it still hasn't.
Yeah.
And that's not even the reserve currency of the world, nor do they have the industry and the innovation that we have in the United States. And so we could certainly go on longer than they could, and they still haven't collapsed.
Yeah.
Refreshing perspective.
You've suggested that tariffs are being used strategically to manage national debt yields. Can you explain this perspective, its potential impact on the economy?
Tariffs to manage debt yields. Well, the tariffs are a tool to do a whole lot of economic policies, some of which is to manage trade. But I don't think that's the real thing that they're doing because, of course, the United States doesn't want to make T-shirts and sneakers. Like, we don't want to bring that back from Vietnam. We used to.
Factories of
100 years ago,
did you see
the
that
US did
meme
that.
with
Yeah.
like Trump and Musk sitting there in a factory?
No, I didn't see that. But what tariffs are used for is several things. They're a tool, one of which is to help protect industries and get them going again. So, for example, Taiwan hasn't always made microchips. That's new. They decided as a policy decision, we should move into making microchips, and not that they make the best ones in the world. And so we know that there are some sectors that we need to have in the United States that are important for Americans' welfare, important for national security. And at the rate that we're at, without some sort of protectionism, they can't get going fast enough. And so one of which is we need to bring a lot of industries back, not to give people jobs in sweatshops making T-shirts, but strategic things we need in the U.S. Number one, a lot of those would have to do with things that the military might need, also medicines, things like that, medical equipment. We saw a massive problem with that in the COVID pandemic, but also strategic things such as our minerals. So we need steel and we need copper and we need rare earth elements. We need those here. The United States is the second largest producer of rare earth elements in the world, which is used for all types of electronics, but also missiles and a lot of weapon systems and things like that. But the U.S., while we're the second largest, we can't make near enough for what we need. So yes, we make them, but we're still dependent on China for that. Yeah. And so a lot of that is what's happened to the U.S. by sort of hamstringing ourselves with EPA regulations and just all types of onerous regulations that have to be followed. And so we've sort of hollowed that out. And so a lot of the tariffs brings those back. By making it a little bit more expensive, all of a sudden we can spend the money to bring it here, right? It becomes a good investment. So that's what I'm looking at the tariffs for. And I think it's a big misconception that people have that, number one, nobody will want to trade to the US anymore. And number two, it makes things more expensive. And three, like the US can't be competitive in that way. As a business person, it's pretty easy to understand that when I make a product, labor is only maybe one of 20 inputs that goes into making the product.
Absolutely.
Even the iPhone. Trump talked about making the iPhone in the US. Can we make them cheaper than China or cheaper than India? Well, labor makes up less than 3% of the cost of the iPhone. So you take the labor from $5 to $20, but it's only 3%. What does that increase the cost? $10 of an iPhone? Does anybody care? But then it also takes into account, or doesn't take into account, efficiency. So if a $20 an hour person could do the same work as let's say it takes a $5 an hour worker 4 hours, but a $20 worker could do it in 1 hour. The labor cost is the same.
Yeah.
And then what about if I add AI and automation to it? Because it's really all about efficiency. See, the way China works out, the perfect story was Milton Friedman visited China, and he went there and he saw all these people digging, I think it was a dam, and they're digging with shovels. And he's like, what are all these people doing digging with shovels? Like, get a tractor out here. And they said, but we need to keep them working. He said, well, if that's the case, then just give them spoons. It's not about keeping people busy. It's about efficiency. That's capitalism, because we should be working on higher and higher and higher value things back to bringing value to the world. And so these tariffs could provide enough protection and incentive to start rebuilding some of these key things here, could bring a lot of innovation to the world, AI and automations and things that are really important. And I think it's going to lead to the greatest era of prosperity and wealth that the world's ever seen. I'm super bullish. And that's why with all these doomers, I couldn't disagree with them more.
Amen. So we talked about how the world is changing, and a lot of things are also happening with investment allocation, right? So we have the traditional 60-40 portfolio, which has been hammered by the recent changes, and we're seeing all these correlations changing. And that brings us to ask you, what are the modern asset allocations that people need to take into account when they want to invest?
Yeah, which brings us back to the previous question you asked about the bond yields that are screaming to all-time highs, and it being this imminent collapse and whatnot. And I think a couple things. Like number one, I say often, because we're in this technological revolution, I talk about that the future is not evenly distributed. So some of us see things earlier than others, and we get that advantage, the first mover advantage. And so certainly we see asset price, or I should specifically, the bond prices are screaming all-time highs. As I said, that signals that the world is basically not trusting that monetary system anymore. One of the reasons why it can continue for a lot longer is because Bitcoin is here. So a lot of people think that Bitcoin specifically will come destroy that because it'll suck all the wind. Everyone will put all their money into that. The US dollar will collapse. But what if Bitcoin actually preserved the US dollar? You see, the US dollar has two main functions, right? Certainly there's the store of value function that's not fiat, but in treasuries. And then there's the currency piece, the medium of exchange piece, right? And so, most people, I think there was a meme Michael Saylor said, for people that save their wealth in dollars, we have a word for them. We call them poor. Like most people at this point know they shouldn't be saving in fiat. I mean, come on. Like even we talked earlier before we started recording, all the people that are never going to make it, even they know they shouldn't be saving in fiat. Even they know. At least they know enough to have a little bit of their paycheck taken out and go into like their mutual funds or whatever, right?
Yeah.
So it's like, I don't see that changing that system. Like we can still spend the dollars, but we just need to be saving in something else, right? Then the question is, what are we saving in? And so to the point that you brought up with the 60-40 portfolio, that's been the mantra, that's been the bread and butter of every financial advisor. Financial advisors are very, dare I say, lazy. Dare I say that they've been taught in an industrial era school system and given a set of industrial era tools for a world that we're no longer in today.
Yeah.
That's the problem.
Programming.
And they're pre-programmed. We talked about the pre-programmed track most people are going on. And so they have to unlearn what they've learned and then go out to seek a new system. And that's super difficult. But we know, of course, we're here talking about Bitcoin at the Bitcoin conference. And I call it the cheat code. I'm not the only one calling it the cheat code, but it's the cheat code because like you could literally just buy Bitcoin and outperform every complex fund and every complex strategy and just buy the one thing. And by adding a little bit of it to your portfolio, then you can outperform it. And so while we're seeing the shift out of, I don't want to say the end because it's not imminent, but the end, the rotation out of long held store value assets like US Treasuries, we're rotating into something else. What are we going to rotate into? Well, central banks are buying more gold than any time in history. So we know central banks are seeing that. And then we see the rise of Bitcoin, not just you and I who have been talking about this for years like a bunch of psychopaths, but now it's a full-blown institutional frenzy.
Yeah.
Right? And when I say institutional, I mean both from a publicly traded Bitcoin standpoint, but as well as all the ETFs that have popped up all over Wall Street. And just last week, Charles Schwab, which is one of the largest financial advisory firms in the United States, had a big meeting. My sister-in-law is a vice president there, financial advisor. And of course, we have a lot of fun at our family get-togethers, and because I don't agree with any of that. But she said forever that even if a client asked her about Bitcoin, she wasn't allowed to have that discussion.
Oh, dang.
And so just about 2 weeks ago, they decided to change that policy. They capitulated, right? And they had a big conference, and they said, okay, we're going to have a whole strategy. And that came out over social media this week now, finally. And so that's what I mean by this institutional frenzy for it. And then we have the sovereign frenzy. And so certainly there's the central banks buying gold. I think it's up, 25% the last couple of years. But then we have Bitcoin as well. And that's the rotation out. And so people need to save themselves. How do they do it? Bitcoin is just the cheat code.
For sure. And with Charles Schwab, it also brings in the famous saying that is attributed to Gandhi, but nobody knows if it's true. First they ignore you, then they laugh at you, then they fight you, then they capitulate
then they join you. We still have Vanguard. Vanguard is also a big one. They're still sitting this market out,
What did Jamie Dimon just said? I don't like Bitcoin, but I will not prevent you from playing with your Bitcoin.
Is that what he said?
Just now, recently.
Oh, really?
Yeah.
Yeah, originally he had said that if anybody at JP Morgan, he would fire them. If anybody he found out at JP Morgan he would fire them. Yeah.
It's time for him as well.
And I put this tweet out, a few weeks ago, and I was like, Larry Fink, largest asset manager in the world, says buy Bitcoin. Ray Dalio, largest fund manager in the world, says buy Bitcoin. President Trump, the leader of the free world, you should buy Bitcoin. Your cousin, it's a scam. Like, come on, man.
Tired of feeling like your freedom and future are fading away? Do you live in a country with growing inflation, crazy housing prices, weird culture, and a chaotic economy? You're not alone, and my friend Mikkel Thorpe and his team at Expat Money can help. Mikkel is the world's leading expat consultant on a mission to free you from broken systems. He's been an expat for 25 years, lived in 9 different countries, and has helped hundreds of people with second residencies and passports, offshore banking, international investing, and many other essential tools. If you're serious about protecting your wealth and your family, it's not enough to hope things will get better. You need a plan B in another country. The team at Expat Money can help you build it legally, safely, and without wasting years of research. Visit expatmoney.com/aflat and leave your details for a follow-up. In a world hypnotized and sleepwalking towards totalitarian control and digital enforcement, awakened voices rise to inspire change and radiate hope. In December 2024, I had the honor of hosting Professor Matthias Desmet at a conference I produced called New Totalitarian Order. This masterclass is now recorded and available to watch. The conference explores the psychology behind global mass processes, offering a behind-the-scenes look at science, economics, and human potential. It addresses challenging global agendas, mass formation, transhumanism, consciousness, societal change, and the path to transformation. Click the link in the show notes to access 3.5 hours of exclusive presentations, in-depth content, and my fireside chat with Professor Desmet. Use my code AFLAT for 10% off. I hope you find great value in it. The last video of yours I've seen, you mentioned the 5 trillion liquidity event that would boost Bitcoin and stocks. Can you elaborate on the macroeconomics forces behind the prediction?
Yeah, I'd love to. I think everyone's trying to time the market, which don't do it. If anybody could do it, they'd be the richest person in history. They can't. We know tops and bottoms only when we look backwards. Now, we can tell when things are expensive or cheap. We can do that. But what we want to do, though, is we want to be looking at leading indicators. So if we understand the mechanics, like, why does Bitcoin go up in the first place? Well, it's because we have expanding value. Money supply goes up, pushes asset prices up. We're also creating more value, building more buildings, building more inventions. And as that goes up, then it has to go somewhere to be stored. There's liquidity sponges. So people store their wealth in equities or bonds or real estate or gold or whatever. And now Bitcoin is a new asset. And it's the best performing asset that we have. And so when we understand those mechanics, when the money supply goes up, asset prices go up. They don't all go up equally. They have different what we call sensitivity ratios. So then you'd go, okay, well, if I can look at the global money supply, if I could look at the global liquidity. So the money supply sort of looks at like M2. And that's like the total amount of money we have in the world. There's most people look at US M2, then there's like global M2. But a better indicator is actually like total global liquidity. Now, a lot of people know exactly what that is. There's 3 different people that I follow for this because they make their own baskets. There's no steadfast rule of what this is, but it's basically not just the amount of money, it's the ability to create money, because money is created through debt issuance, right? So we'll look at like lending reports, bank regulations, things like that, so we can see how much money could be created. And so I look at Michael Howell. He's the originator of this chart. He's the GOAT when it comes to global liquidity. Nick Badia, my good friends over the Bitcoin Layer, they have their own. They're very open of how they've made their basket. It's very good. Real Vision has one that's also really good. And again, you could just look at global M2 and it gets you roughly there. You could look at like the Fed, because the dollar drives everything. You look at like a Fed balance sheet minus like RRP, for example. But this global liquidity. And so then we understand that when that goes up as a leading indicator, then asset prices will go up after that. We know that through decades of data, it typically happens on a lag. Obviously, money doesn't get printed and find its way to Bitcoin in 30 seconds. And so it's debated how long the lag is. It's debated between 8 to 12 weeks. So let's just call it 90 days.
3 months, more or less.
3 months, more or less, right? And so what happens is you can see, like, for example, in Q4 of last year, asset prices were making new all-time highs. So Trump had just gotten elected. Asset prices around were just making new all-time highs. But as that was happening, global liquidity was draining. We get into Q1 of this year of 2025, and all of a sudden, asset prices, S&P, Bitcoin, everything starts tumbling, even though liquidity was going up. And that's because of a lag. So if you were watching last quarter of last year, you would know that the first quarter of this year was going to be rough.
Yeah.
And when you look at what happened the first quarter of this year, you go, well, the second quarter of this year should be really good. And that's the $5 trillion number. What Michael Howell does is he actually reports the global liquidity as a number, like the total dollar amount. And I think it was whatever, 175 trillion or 179 trillion dollars. And so you can see each month the liquidity rising. Right. And that's that $5 trillion I was talking about. That's now coming over into global assets.
Yep.
I'll add to that it's the liquidity is not just the new money created, but it's also the new money meant to serve and refinance previous debts.
Sure.
So the more the debt system is large, the more money we need to create in order to refinance previous debts, and the interest rate, which is why it's constantly growing like that.
And that's a very important piece that we need to hit on. So what happens is you have all this debt. So debt never gets paid. Remember we talked about that earlier, because we're a debt-based monetary system and has to always expand. So debt never gets paid, it gets rolled, to your point, right? And we have debt maturities from 6 months up to 30 years. Right now they want to do 50-year bonds or whatever, 100-year bonds, who knows? But 0 to 50 years. Now, if your bank, you have debt, right, on a credit card, your car loan, whatever. If your bank called you up and said, hey, we'll refinance you to 0, would you take it? Like, of course, right? And so what happens is, it's this very interesting phenomenon. You know what a metronome is? It keeps perfect time for music, right? So you can set the time period and it keeps perfect time. But if I put like 100 on this table right here and I started them all at different times, they all get synchronized. It's like this weird phenomenon, how the table starts shifting and they all sync up. Anyway, so you have all this debt around the world. Everyone in the world has debt. Lots of different debt and lots of different maturities. What happened is in 2008, when we had the great financial crash, in order to save the world and save the global financial system, what did they do? They dropped rates to 0. And what do you think everybody did? They refinanced. So we had all this debt maturity that got synced up into one point. Now, when you look at the debt maturity of the world, about 75% of global debt is between a 3 to 5 year maturity. Call it 4 years. Now, let's think about this. Starting 4 years from 2008, 2012,
That's
2016, 2020, 2024. Does that sound, it does sound familiar. Let's see. That just so happens to be the Bitcoin halving cycle. It just so happens to be the US presidential cycle. Just so happens to be like the 4-year business ISM cycle and all these different things. And so it's an important point, because what happens is about year 3, the debt needs to be rolled over. But there's not enough liquidity, to the point that you brought up, not enough liquidity to roll that debt over. And so we get into these liquidity pockets where there's not enough money, the economy starts sputtering. And then we get the next injection and then back off to the races for another,
And you can connect that too with 2011 being the European problems, the first debt crisis, and the second one, Then 2015, you had the Greek crisis in Portugal. 2019, the repo one right before COVID. So it's like the end of the liquidity is making everything go bust and showing all the problems.
It's interesting, and who knows how long it goes for. I mean, cycles go until they're broken. Michael Howell, back to the GOAT, he was sort of predicting sort of an end by the end of this year. Now he's saying, with sort of all the turmoil that we've had and this problems going on in China and tariffs and whatnot, he's pushing it out well into 2026 at this point now. So the answer is we don't know. But what we do have is we have leading indicators to look at. And so it's important to watch those.
Amazing. Okay, let's switch the conversation a bit. The three of us are in a way entrepreneurs doing our own thing, media, investments, etc. And we are all Bitcoiners in our blood and spirit, and we understand truly what it means for the world if other people adopt it. What role do you think Bitcoin should play in today's portfolio for individuals, for corporations, and for countries, given everything we talked about so far?
It's a great question. So number one, obviously, it needs to be in the portfolio. That's just a no-brainer. Like, buy $1 worth, buy $5 worth, put some skin in the game. That'll at least get your mind in the game, and you'll start understanding it. What role should it play in the portfolio? It depends, right? Because there's levels to this game. So I see a lot of people on Twitter and they're like, sell your chairs, like go all in on Bitcoin kind of a thing. And sure, when you have, $1,000, like go all in, right? If you have 100 million, it's a little bit different, right? And so you have to understand there's like levels to this game. I have a Bitcoin venture capital fund, the Bitcoin Opportunity Fund. And so we invest into Bitcoin companies that are building on and around the Bitcoin ecosystem. I believe that we should build the world that we want. I believe in this better world that's powered by Bitcoin, and I want to help bring that world to fruition. And so I know that it's important for these companies to get built. Otherwise, how will this world develop? And so for me, I want to buy the Bitcoin, sure. But then I also want to deploy some of that Bitcoin to get that world built. And a lot of Bitcoiners are like, why would you do that? Just buy Bitcoin. Sure, but like, how does that world get built that you want?
Yeah.
Like if you're the hardcore Bitcoiner, why wouldn't you put some of that there? Now we do it in the fund, and our goal is obviously to make more money than what Bitcoin goes up by. But I wanted to say real quickly though, because especially for your audience, like sometimes the world gets built. Let me rephrase that. Most of the good in the world that happens is through self-sacrifice. Right. I mean, how much have you sacrificed to go and do what you've done over the last couple of years, right? Yeah. It's really the example that Jesus laid, which has sort of led to this Judeo-Christian world that we're in today. A lot of the world doesn't have a culture of self-sacrifice. In the United States, at 4 a.m. when the power goes out, why does the guy get in his truck and go fix that thing in the storm? Right. And that's this world that we're in. And so I would say that what I try to tell Bitcoiners is like, look, if you're not going to build this world, who is? And so even if some of that money were sacrificed, even if some of that money didn't get the highest return, would it be worth it? So that being said, the goal is to get higher. So I would say, number one, buy Bitcoin. And that should make the bulk of your portfolio. Above that, then what could I do with smaller percentages of my portfolio to get even more gains? So some might say, well, could I put, in my normal stock portfolio, could I put 10% to Bitcoin to get my total portfolio up? And yes, of course you could. I run all my numbers based off of what Bitcoin's appreciation rate is. That's my hurdle rate. So it's going up by about 50% a year. So unless something can go up by more than 50% a year, I'm not really interested in it. And so that's my hurdle rate. So for me, I want Bitcoin, and then I want allocations above it that I think can beat that. So certainly buy Bitcoin, and once you have enough of that, the most exciting area that we're really playing in right now is these Bitcoin treasury companies.
The public companies.
The public companies. And so this is the new altcoin explosion, right?
Yeah.
And I mean that in a good way, not in a bad way. Altcoins were rug pulls and scams. This is like companies that are buying Bitcoin and helping to bring this company, this sort of world to adoption. But we're seeing the altcoin type returns happening. We're seeing 200, 300, 500% in weeks happening. So there's a lot of excitement here. So I think certainly, and this is MicroStrategy, this is MetaPlanet. I'm here at the Bitcoin conference. They've rolled into a public company now called Nakamoto. They're doing it, et cetera. And so I think certainly the bulk of it should be in Bitcoin. Some percentage of it should be into these types of companies if you're really trying to help that grow. And it's not just chasing number go up. These companies are buying Bitcoin. And then some money should be allocated to building the world out. And so we have a venture fund doing that. There's several others that are here that you can go find as well. And then those can get you even more returns as well. So that's sort of how I think about allocating to it.
Amazing.
I want to ask you about personal branding. It's a topic that both you and I preach and teach and believe in. Why do you find it a necessary tool these days? And also, what are some other top skills that you think young people today should harness in the age of AI and Bitcoin that we live in?
Yeah, I don't really teach personal branding. I want to.
Well, you do without knowing.
I should.
You do. Because you are walking the talk.
Yeah.
This is, I mean, your brand is very strong. And
yeah, it's been getting strong, and I of course I take it serious, and so I mean I have a full-blown studio and staff and the whole thing, but I haven't been taking it near serious enough. Like we're going really big right now. I'll probably be adding another 10 people to my team. Like we're probably going to triple, quadruple the team. So anyway, if you're looking to join a media team, hit me up. Just because it's so powerful. It's like the most powerful thing. What I would say is specifically here we are in Vegas. We've got to be at a couple events together. We've got to build a friendship together. It's amazing. Ben, we just got to meet. But what I tell people, and I actually tweeted this posted on X about this event. I said, a lot of people didn't come because it's too expensive or they've heard this information before, but they don't realize that it's all about relationships. And so what the young people have it wrong, and actually most people have it wrong, is that we don't chase money. Money is a byproduct.
Yeah.
Money is a byproduct of skills that I develop and relationships that I build.
Mm-hmm.
And so we come to these events to build relationships and skills. So I'm learning new things that I could use. So for example, when I was in Abu Dhabi speaking in December, I learned about some new areas in Bitcoin and how Bitcoin was coming to finance. And I went home and immediately applied those. And I used my relationships that I had in the industry, and I quickly made a bunch of deals.
Mm-hmm.
New skills times the relationships equaled the money. And so coming to events, sure, but then back to the personal brand. The personal brand creates all these opportunities. And I'd say it's important for a couple of reasons. One reason, and I try to tell everybody, every single day a non-negotiable you should have is to read something and put it back out into the world. Even if you wrote it in your own journal, but put it on Facebook or Instagram or Twitter, whatever it is, or even in your own journal. And because what happens is there's 3 levels of learning, right? So I can receive the information, I can apply the information, and then I have to teach the information. And how many times we've all done it, we hear something, we're like, oh my gosh, that's so good.
Yeah.
And you try to tell somebody and it just doesn't come out the right way.
Yes.
Right? Because we have to be able to organize those thoughts, and then we have to be able to develop our own. And that's what putting it back out there does.
Yeah.
It holds you accountable.
Absolutely.
It makes you scrutinize your own work. How many times do I fact check stuff before I put it out there? So I just think, man, it's just such an important tool. And the last thing I'll say just real quickly is that whether you want to build a personal brand or you want to be an influencer or whatever you want to call it, it's not about that anymore. We are all responsible for telling the world who we are, or somebody else will.
Yeah.
Here's a quick story, if I have time.
Yeah.
I'm an OG, man. I started an internet business in 1999. I'm in Southern California. I was young. I didn't know what I was doing. We started this internet business, raised some money. The dot-com bubble blew up. 2001, I started an e-commerce business, blew that up, had a Fortune 500 exit, built a medical tech company, sold that off, doing really good. Been in the internet for a long time. Then I spent 8 years doing lead generation, generating leads for companies. But I never built up like a list.
Mm-hmm.
I wasn't known. I was like a nobody.
Yep.
Right? I knew all about online marketing and how to build websites and all of that, but I was nobody, like I said, no list, no nothing. And what happened was in 2008, I was doing lead gen for financial service companies, attorneys, mortgage companies, tax debt companies, whatever. And I generated a lead for this law firm, and a customer was unhappy with whatever. And the law firm refunded, it was like $700, refunded their money, whatever. But it wasn't good enough for this guy. He was like some professor or whatever, some like smart guy. And I wasn't smart enough to know what I was doing. And so he went on to like whois.net and saw the website that generated the lead was owned by me. And then he reverse looked up all the websites that I had. And I had all these lead gen websites. And just put me on blast and went on to whatever, rip off report and spam, whatever they are back then, right? Like all these like scam alerts or whatever.
Mm-hmm.
And said, Mark Moss, he has all these websites, he generates these leads, blah, blah, blah. Blew me up.
Yep.
And it was devastating. Like, all my friends are like, Mark, what's this? What are we seeing here? Like, here's some scammer. Like, what's going on? And it's because he was the only one that ever told the world who I was.
Mm. You didn't build your own
His
reputation.
thing that he wrote up, as wrong as was the only thing about me.
Yeah, there was nothing else.
And it was on the page of everything.
Yeah.
He got to tell the world who I was, not me. Today, good luck. Try that. You'll be on page 15 or 20.
Absolutely.
And so what I'd say is, it's not even about a personal brand. If you meet somebody here or your friend invites you to dinner, you're going to meet someone, they're going to go look you up. And you should be ready to tell that person who you are.
Exactly.
100%. And one of the things that I have taught just a few weeks ago when I did my recent personal branding class is that your reputation is one of the most important things you have. And as you said, if you don't take care of it, someone else will do a bad job for you, and then you're screwed. If I see Bitcoin as a hedge to my finances, I see personal branding as a hedge to my security and my reputation. It is a tool for sovereignty, because if they cannot hurt me financially, they will try to hurt my reputation. But if I have a good personal brand, it will be very hard to ridicule or, shake up my reputation.
Yeah.
So that is if you look at it that way, it becomes a very smart tool to have.
Yeah.
But you do need to do the work in order to build your own brand.
Yeah.
So I totally align with what you say.
I think it's worth it. It's a lot of work, but it's certainly worth it.
Yeah, and it's online reputation management too. So you can also hire an agency like, I don't know, some web leaders or whatever to say we are building the world back better.
Yeah.
What we just talked about in terms of personal branding really narrows down to like affecting our own communities. So Bitcoin is about decentralization. Bitcoin is about taking responsibility. And what we see when companies start buying Bitcoin, for example, and adopting this Bitcoin treasury is that we see individuals starting to lead processes from the micro level to the macro level.
Right.
When it comes to like what people can do in their own communities, municipalities, like making Bitcoin more regional, what would be your takes on that point? How can people, with their personal brand as well, participate in Bitcoin more than just acquiring it or potentially investing in Bitcoin companies?
Well, here's an answer that you might not be looking for, or might not want, but part of it goes back to I think before we were recording, we were talking about the small percentage of people that will make it. And I don't know, I've been making content for over 8 years now, I think, at this point. And of course, I make the content to reach the people.
Yeah.
Right. But when it comes to like locally or regionally that you're asking about, the question that is often discussed in these circles is, how do we orange pill more people? How do we get more people into Bitcoin? And maybe one of the last messages Satoshi left for us was, if you don't understand it, I'm sorry, I don't have time for you. I also think about Jesus, all the teachings he did, he would always talk in parables. And he'd be like, it's sort of like a farmer walking down a path and he throws out some seed and the birds get some of it. And the disciples are like, why do you talk like that? He's like, let those who have ears hear. And so, I have like a little bit of a different take. I mean, and it's weird because I reach millions of people a month with my content talking about it. But I'm talking about a problem and a solution. And if they have ears, let them hear. But like in a local environment, like I'm not going to go try to like orange pill somebody. I think about it from like a sales perspective, which is that people are selfish. They have a problem. And if I could introduce a solution to solve their problem, then there's something there. If I could meet them where they're at. But most people, they don't have problems. They're not trying to solve problems. And so mostly Bitcoin just doesn't come up. Yeah. So I'm not, I know people who are trying to get merchants to adopt it. And that's great. Do your thing. For me, I don't do that. One thing I do occasionally is I do host some meetups, but that's more like getting the Bitcoiners to come in.
Yeah.
So that's kind of creating some community between them. One thing I'm just starting up right now is I'm starting a youth program. So I'm going to do 15 to 20-year-olds. I'm going to do like a once a month where they can come in and learn business. They can learn investing. They can learn money. Obviously about Bitcoin as well. So I'm going to start that where they're still young enough, I think, where I can sort of help them. Not like we talked about the Matrix where they're too old at that point. So those are a couple things that I'm doing personally. I think, to each their own, like the world needs all of us doing it.
Yes.
The other thing I would say is, and this is maybe even a more contrarian take. Some people don't like this. Gresham's law, good money drives out bad. And so, I don't want to spend my Bitcoin to buy Starbucks coffee. I don't want to do that. In the United States, we have quarters and dimes, our change, right? Our coins. And up to 1965, they were made with pure silver. Yeah. And there's no pre-65 quarters and dimes in circulation anymore. You can't find them. And even if you happen to, you wouldn't spend it because it's worth several dollars now. So you're going to save that. But gold bugs, they buy gold bars and gold coins because and one thing they buy is it's called junk silver. So it's a bag of dimes and quarters that are pure silver. And the reason why gold bugs buy those instead of silver bars is because they believe in this world where like everything collapses and they're going to need the small denominations for bartering. Mm-hmm. So what are they saying? What they're saying is there's a world where only this could be used as money. So then I will use it as money. But until then, we'll use the fiat system. And so with Bitcoin, it's the same way. Now, if I wanted to send a woman in Afghanistan some money to save her life, of course I'll send Bitcoin. I can't send her fiat. Or somebody in North Korea, of course I'll send Bitcoin. So there's certainly use cases for it, but I'm not going to get my coffee shop down the street to try to take it. I'm I'm not going to spend it that way.
You'll prefer to basically be on credit then, like to take a Bitcoin-backed loan, spend fiat, and not waste your Bitcoin.
Yeah, spend the fiat. Yeah. Use it for what it needs to be. Like I said, if I could save someone's life in North Korea or Afghanistan, for sure. But my coffee at the donut shop, like, I don't eat donuts, but you know what I mean?
What's it called? Steak and shake.
Steak and shake.
Steak and shake.
Or something, yeah.
Yeah. All right, we're getting to the end.
I would go there and spend some sats though, just to do it.
Of
just
course,
to do it,
it's fun.
Exactly.
We're getting to the end of our hour. Okay, so you did mention a few names of people that you are inspired by, lending some information from, using their resources in order to build on your work on top of theirs. Which other concepts or guests stuck with you, helped you formulate your own narrative or opinions? Which people do you recommend to also?
Well, I love what you said, to formulate your own opinions. So that's a really key piece. And so we have too many people that receive information and parrot it back out, but don't really think about it. So like breaking it down to like a first principles level, what does this really mean? And sort of like wrestling with the idea. I like to think of it that way. I'm having a panel here, I think I said it, with James Lavish and Len Alden, and we're talking about Triffin's Dilemma. And while I was driving in traffic the other day, I was on voice mode with Grok, and I was using the reasoning model, and I was just going back and forth. But what about Triffin's Dilemma? But is this true? But why is this? And so wrestle with those things. Now, to answer the question, the people that off the top of my head, there's so many. Probably the ones I align the most with, Lynn Alden for sure. She's super, super smart. Luke Grauman.
Yes.
Luke Grauman is someone I've known for years. I follow all his work. I mentioned Nick Badia at the Bitcoin Layer. Those guys are amazing, so I read their work. Michael Howell, I read his work. The Bitcoiners are going to hate me for this, but I think Real Vision and Raoul Paul put out really good work. I do not agree with any of his stuff on NFTs and art, any of that, but his macro takes I think are really good.
I agree with that.
See, those are ones that sort of stand out to me off the top of my head. I mean, and there's obviously different disciplines for different things. I mean, I'm just thinking more sort of macro, big picture. James Lavish, my partner at the Bitcoin Opportunity Fund, he does amazing work. Yeah. Boy, I'm probably leaving out so many that I sort of look to on a regular basis. But those are probably the ones that I can think off the top of my head that sort of like they're kind of my go-tos.
Yes.
I read them pretty much on a regular basis. Yeah. There's a wealth of knowledge out there, but yeah, those put out really good work, I think.
Beautiful. And let's end on a message of hope.
Yeah.
What gives you hope? Where do you draw your hope from?
Yeah, I think ultimately only hope matters, right? Hope is what gives us energy. So we need to be setting goals. Most people don't even do that. And then we have to have hope that we can achieve those goals. And that hope is the energy that drives us to achieve those things. If you're the glass half empty kind of guy, you'll never start the business.
Yeah.
You'll never ask the girl out. You'll never invest your money because you'll never venture anything, like unless you have an optimistic frame. And so, you know, I guess maybe just being an entrepreneur for my whole life has led to that. Maybe because I believe in God and I believe in where we're going eventually, so I have that foundation as well. But I think it's just I learned early on, and I think it was Robert Kiyosaki. It might have been Napoleon Hill, but they said, whenever you speak about the future, lie, because everything about the future is a lie.
Yep.
Tomorrow is not
exist.
guaranteed.
Yep.
I can say I'll meet you tomorrow. How do I know I'll meet you tomorrow? So everything we say about tomorrow is a lie, right? Unknown. So why not lie positively?
Beautiful.
And so I've always just carried that. You're not going to get ahead being negative.
I love it. Awesome.
That being said,
Yep.
I'll end it by saying that's the hopium. That's the feel-good feelings. But I believe from a macro analytical technological framework, we're headed into the greatest era of prosperity ever. And maybe it's because of my bias, but when I look at the technologies that we have with Bitcoin and AI, when I look at the explosion and wealth of information that we have at our fingertips and the combination of a global monetary asset that can't be debased, I see the greatest era of prosperity that we've ever seen, greater than the Renaissance. And so I'm super, super bullish on that as well.
You are, and you make us too.
That's very hopeful indeed, yeah.
Yeah.
This has been amazing. Thank you so much for coming.
Thank you.
Loved having you on.
Thank
you
you.
so much, and good luck at the conference.
Thank you.
Thanks for being with us. Please take a minute to give this episode a like, a comment, and subscribe or follow. And please share it with your friends so they can also get value and choose to take some positive action in their lives. Till next time.